Ladies and gentlemen, good day and welcome to the Electronics Mart India Limited conference call hosted by Anand Rathi Share and Stock Brokers. It is my pleasure to introduce the management team of Electronics Mart India Limited who are here with us to discuss the results. We have with us Mr. Karan Bajaj, CEO, Mr. Premchand Devarakonda, CFO. Along with them, we also have Mr. Srinivasulu Etta, DGM Finance, Mr. Navakant Guturi, DGM Finance, and Mr. Rajiv Kumar, CS and CCO. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Karan Bajaj for his opening remarks. Thank you, and over to you.
Hello everybody, I am in the Q2 and H1 FY23 earning call for our company. I would like to wish you and your families and a very prosperous year ahead. In our maiden earning calls post-listing, I would like to take the opportunity to express to our and for making EMI.
I'm sorry, sir, but your voice is not clear. I mean, there is some disturbance coming from your line.
Is it better now?
No, sir. Can you speak few lines, please? There is some noise coming when you're talking.
Is it like an echo or something, or?
Just a moment, sir. Participants are requested to stay connected. Ladies and gentlemen, thank you for being on hold. We have the management back on the call. So please go ahead.
So I would like to thank everybody for joining the Q2 and H1 FY23 earning calls for our company. And I would like to take a moment to provide you with a brief overview of the company. Electronics Mart is the fourth largest and one of the fastest growing consumer durable in electronics. As of FY21, we were the largest organized player in the southern region in revenue terms. And we operate our business activities across three major channels, that is retail, wholesale and e-commerce. I will give you a little brief on all the three channels and then we can move ahead. Retail is our main core business and we operate under two different store formats, the multi-brand store and the exclusive brand store. Multi-brand store offered multiple products under one single roof where the customer experience is enhanced for every individual brand and product by adding a wide range of electronic products under one roof and providing one-stop solution for all the electronic needs. Our multi-brand stores are branded as Electronics Mart in the region of Delhi NCR and AP and Telangana. As of September 30th, 2022, we operate over 100 plus MBOs, which include two specialized stores under the brand name Kitchen Stories and Audio and Beyond, focused for high-end kitchen appliances, for home cinema and networking solutions, respectively. Our EBOs are exclusive brand outlets which showcase products manufactured by the top manufacturers like Apple, LG and Samsung. As of the September 30th, we operate around 12 exclusive brand outlets. Our store offers a wide diverse range of products from large appliances like air conditioners, television, washing machine and refrigerators, and mobile phones and small appliances, IT and other product categories. We display over 6,000 plus SKUs ranging from different brands and around 70 consumer durable and electronic brands. Our local market knowledge, careful product assortment, supply chain efficiencies coupled with efficient customer service has enabled us in providing our customers with electronic products at a competitive price with easy EMIs and a wide range of products to shop from and hand-pick the product best suited to their needs. Our wholesale division is a limited division where we've seen that we, over a period of time, supplied to individual small mom and pop stores across the region of AP and Telangana. This helps us liquidate the stocks as well. So that is a channel where we are available across 200 plus mom and pop stores in the region of AP and Telangana. Our e-commerce business is a function of our extension of a business where we are present on the top marketplaces in the country where we have selected SKUs that we list and we sell. We are associated with the largest domestic and international players there, markets to expand our business reach from brick and mortar retail stores to e-commerce platform, where we sell selected SKUs under around 200 SKUs compared to our 6,000 SKUs that we offer in the offline space. One important point that I would like to make a note on is the seasonality of our business. Our business depends on two major seasons. One is the festival season, that is the Dussehra and the Diwali period, which is usually covered in the Q3 period, and the summer season, which is covered usually in the Q1 period. So there are two major seasons that see a growth in our business and see an increase of our business during this period. Our results across quarters in our financial year may vary and not be comparable to each quarter, as the two major quarters like Q1 and Q3 are heavy on the sales due to the festive season and are not an indicative form of our annual financial results. Little brief on the NCR, the Delhi branch that we had. Currently, we operate as on 30th September, we operate around 8 stores in the Delhi NCR region. We will continue to follow our cluster-based approach for region to deepen our roots and make our presence stronger in that region. This enables us to identify and grow our brands there as well. The market segmentation, the customer demand preference, little different than the existing market that we operate in, and the efficiencies that we have in terms of our cluster-based approach that has worked really well for us in the past as well is what we want to go on with in the future as well. The strategy would remain the same for the region as well. And I would like to just put a little flavor there that it's just a beginning there for us, and we feel that it's going to stabilize quite soon in the next few coming quarters as we expand and grow our roots in that region. We started our operation the 14th of August in the Delhi NCR with 8 stores. Now I would like to hand over the call to Mr. Premchand Devarakonda, CFO, and he'll take you along to the financial results for the quarter and the half year for FY23. Thank you.
Thank you, Concall, and good evening, everyone. And I thank each one of you for joining on the call. At the outset, I wish you and your family a belated Happy Diwali and a prosperous New Year. Before I speak about our quarterly results, I would like to re-emphasize that the second quarter is always an unseasonal quarter in our industry. With this brief preamble, I am pleased to announce that our company has delivered revenue from operations of rupees 12,277 million with a growth of 33% over the same quarter last year. These revenues are generated through 3 channels, namely retail, wholesale, and online. Retail revenue, which comprises the sales from our MBOs and EBOs, generated 11,105 million during the quarter, with a growth of 30.2% over the same quarter last year. Our wholesale revenue, which is B2B sales to single-store retailers in AP and Telangana states, delivered rupees 92 million during the quarter. Our online revenue has been rupees 21 million during the quarter. While our other operating income, comprising incentives, commissions, etc., delivered about 1,060 million. Our EBITDA stood at rupees 753 million, which is up by approximately 8% over the same quarter last year, with EBITDA margin at 6.1% versus 7.5% in Q2 of FY23. We have opened about 8 stores in this quarter in NCR, in line with our strategy to expand in this region and carried out marketing campaigns in a decent way to create our brand image. In this process, we have invested in advertising and marketing activities, which has marginally impacted our profitability for the quarter. Now moving on to H1 results. Our company has delivered revenue from operations of rupees 26,362 million with a growth of 39.4% over the H1 last year. This has been our highest half-yearly sales since inception, because of maturity of stores operationalized through the pandemic period. At this juncture, I wish to provide a little color on our operations. Bill cuts have increased by approximately 29% to 1.44 million as compared to H1 last year. Our average ticket size has increased approximately by 9% over H1 last year, and our same-store growth rate stands at 0.6% for H1 23, which is an indication of normalcy post-pandemic. During the half year, our retail revenue delivered has been rupees 23,832 million, growth 0.7% over the same period of, backed by strong growth in our summer season sales. Our wholesale revenues delivered rupees 294 million. Online revenue has been 175 million, while our other operating income has been. Our EBITDA stood at 1,724 million, up by 36.6% when compared to the corresponding period of the last year. And EBITDA margins at 6.5% versus 6.8% in H1 of FY22. As I mentioned earlier, the investments in advertisement and marketing in NCR in the Q2 of the current financial year has had an impact on our margins, and in the current it has impact on the margin, which has been offset by the strong Q1 performance of the current year. Our PAT stood at 648 million for H1 of FY23, with a growth of 58.6% as compared to that of the last year, while the PAT margins were 2.5% during the current year as versus 2.2% of the previous year first half. With this, I will conclude and hand over to the operator to open the line for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a question from the line of Tushar from Ventura. Please go ahead.
Yeah, thanks for the opportunity. I have two questions. First one, how much was the commission and incentive incomes in H1 FY23?
Hello, sir.
Hello.
All right.
It's 2021 million.
Okay. Sir, how much?
Yeah. So 2021 million compared to 1078 of last year, sir. This year FY23 H1 it was 2021 million.
2021 million. Okay. And sir, the next question is how much hike have we taken in Q3 to pass on the rise in raw material costs, because that has impacted the margin?
So there was no direct impact in the rise of raw material during that quarter because the H1 usually would consist of majorly of Q1 and Q2. Q1 would be for summer products like ACs and air coolers, for which we have a plan of already preempting the stocks as early as Q3 of last year. So we didn't see a major hike in price there, sir.
Okay. And sir, the third question is on the long-term borrowings. Our long-term borrowings has increased from 144 crores in Q1 FY23 to 167 crores. So, means we have decided to repay the debt. So how much would be the tentative long-term borrowing at the end of FY23?
Sir, out of this, as on date, we have already repaid a long-term debt to the tune of 60 crores, close to approximately 60 crores, and the remaining debt will remain in our books as on FY23, because we want to just continue with the existing term loan. As of now, we don't have any plans to repay these term loans, only to the extent of 59 crores as issue documents, we have repaid that.
Okay. And sir, the last question is on the capex. Our H1 capex was around 200 crore. So can we take the full year capex as 400 crore for FY23?
Sir, it will not be in the same proportion, because in H1 we had invested in the acquisition of properties in NCR, because we are new to that territory. And also we want to have a long-term plan to. For that purpose, we had to invest in the acquisition of assets. But this is not going to be the scenario in future. In future, whatever our capex will be only towards improving the leasehold premises. That's it. And it will not be in the same proportion.
Okay. Thanks, sir. Thanks. That's all from my side. Thank you.
Thank you. We have our next question from the line of Nirav Vasa from Anand Rathi Share and Stock Brokers. Please go ahead.
Hello, sir. Would it be possible for you to run through the store expansion strategy in second half of the financial year?
So, sir, in the first half, we opened another 8 stores in Delhi NCR as a region as of September. So right now the plan is to open few more stores as per projected, and this would be in the region of NCR, Delhi NCR, as well as in AP and Telangana, with majority of the stores being multi-brand stores and few of them selected exclusive brand outlets as well.
Okay, got it, sir. So, sir, end of second quarter FY23, would it be possible for you to give breakup of the stores that we own and the stores which are there on lease?
Breakup of stores owned and leased.
Sir, I'm sorry.
Which are owned.
The management line is not very clear, sir. Can you come closer to the speaker, please?
Is it clear now, ma'am?
Yes, sir.
Yeah. So, ma'am, as we talk, we've got 93 stores leased in the company, and 11 are completely owned by the company, and 8 stores are partly owned and partly leased.
Right.
This is across AP, Telangana, and Delhi NCR.
Right. Would it be possible for you to give the same data for the Delhi foray?
Because Delhi, out of the 8 stores that we've launched, there are 7 stores that we own, out of which 2 stores are yet to get launched. So the 8 stores that we've launched on August 14th of 22, 7 stores are in the books of the company, and the rest of them are leases.
So effectively, would it be right to say that additionally, whatever stores we are going to add would be mainly on the lease basis?
Yes, sir. So for now, right now, whatever we are expanding within Delhi NCR, because the acquisition is completed for the prime market that we wanted to pick up the stores in. So the most of the stores that we are now signing are going to be, majority of them are going to be leased out, sir.
Would it be possible for you to share some color as to how was the Diwali sales? Any broad color that you would like to share?
Right, sir. So, sir, Diwali definitely was, this is one of the few years after the pandemic where, we were able to perform without restrictions, and it was in line with our expectations, and this would definitely give a flavor in the next quarter and would support us for our annual numbers as well.
Sir, I understand it would be a bit early to ask, but how does the summer season outlook look for you? I understand it's a bit early, but if you can give some color.
You want to complete your question?
No, I'm done.
Sure. So, sir, looking at the Q1 summer this year, we were quite confident that Diwali was also on track with us. So it's Q1 next year for summer, definitely we are all geared up for it in terms of, the plans that we would have in terms of marketing or the procurement and all. but it has to do majorly with the seasonality of the product. So we'll be geared up, we'll be ready, but it would majorly depend on the extension of the season or how the season would perform, depending on the weather as well. So that is something beyond our control. But in terms of the other aspects of the business, we are all ready and geared up for the summer season as well, sir.
Sir, as I understand that, there is some time gap between the summer season setting in the NCR market and the southern market. So can we expect stronger, stronger AC sales as compared to the from the NCR market in the early part as compared to what it was done in the southern part of India?
Sir, you're correct on this, but with the number of limited stores that we would be operating in Delhi NCR during the summer this year, and at the same time with our brand being quite new, it would not reflect on the actual numbers that we would be able to deliver there. But then definitely yes, we would be fitting into the summer this year in the Delhi NCR market as well. So we will be expecting, because the summer date would be setting in post April, May, and would be a longer period compared to what we expect down south. So looking at that flavor, right now we are ready for it, and we feel that it should be delivering us the expected numbers for this season at least.
Thank you, sir.
Thank you, sir.
Thank you. We have our next question from the line of Ankit Kedia from Phillip Capital. Please go ahead.
So just wanted to know, if you look at your product mix, right, large appliances share is around 50%, while a couple of years back it was 55-60%. Just wanted to know the seasonality in large appliances. Do you see second half contributing higher for large appliances, because margins out there would be higher? So how do you look at first half versus second half in large appliances, or how much is the margin differential in these products?
Yes, sir, correctly said. The difference between products like mobile IT versus large appliances would definitely vary, and it all would depend on the seasonality as well. So usually the festive season would be heavy on the appliances, whereas the summer would be heavy on ACs and coolers. The other two quarters, that is Q2 and Q3, would be a mix of both IT and mobile on the higher side. So that is why you would see a blended margin coming up to what number it is coming up today. So definitely yes, it would be a mix of, so all quarters would vary differently, and the blended would be at the projected numbers that we would have for the past as well as for the future.
Yeah, but this year, given that Delhi launch happened late, and in Q4 you might see the AC sales come in, do you expect the second half of the year to be heavy on large appliances, or you'll see the benefit of that come in?
We would see a similar mix going forward as well. So because this would be year one only for us, and we would be operational with limited stores in that region. So we feel that it would be quite early for us to preempt the Delhi NCR as a market on terms of the product share that we would have across product categories. But it is in line right now, till now it is in line with what we were expecting and what we've been delivering back home in AP and Telangana as well. So the product categorization is very similar to that.
Sure. My second question is on the Delhi NCR market. Can you talk of some startup losses which you have, and by when do you think these stores would break even? And in second half of the year, what could be the incremental, if I just look at Delhi NCR, what could be the margins only for those markets at the gross margin or EBITDA margin level, if you can share?
Right, sir. So, sir, our initial expectation would be that things are on track since the time we've launched. Definitely, yes, it being a newer market, we had to advertise a little heavily because the number of stores were limited. We had to make sure that, we create a presence, because Delhi NCR is spread across Noida, Greater Noida, Gurgaon, Faridabad, Ghaziabad, and the whole of Delhi city. So the cost of advertising across the periphery was a little more expensive. We had to do some launch activities. We had to, gratify the customers there. That's why we had one of the lucky draws recently as well, what we do back home with the limited stores and the limited sales that we had. So this was all a part of that we had planned earlier. So the cost of marketing definitely would be looking a little higher initially. But then once we open more stores, or it gets offset with the sales or revenue that we generate in the future, which is in line with what we were expecting back home. And in terms of margins, sir, right now we are operating at a similar margin percentage that we would do back home, with a little competition with we setting up the stores there and a little initial momentum. There might be a little plus or minus of around 0.5% in terms of margin levels that we would look at there. So we are ready for it, and that is why you would see a decrease in the Q2 number as well in terms of the EBITDA margin. where there was a direct impact on the Delhi operations, which were in place in terms of the manpower cost, security, housekeeping, marketing, those kind of expenditures that we had already booked in for revenues not being started, which got a little delayed because we wanted to launch the stores on a certain day. So all of these things put together was an impact during the Q2 that we would see in the numbers.
And can you quantify that number for us so we exactly know how the core market has performed? Because on like-to-like basis, the historic numbers would have only the core markets and not the Delhi market. So that will give us some idea on how strong the core market performance is, at least at the EBITDA level. And what is the current run rate of revenues in the Delhi market, if you can quantify that as well?
Sir, can you repeat your question once again, sir, please?
Sir, can you quantify, one, the revenue run rate in the Delhi market which you have on monthly basis? And second is the absolute amount of fixed cost to run the Delhi stores, X of the gross margins, to help us understand that the core market, because in the base year, Q2 FY22, we only had the core markets, not the Delhi market. So the like-to-like performance, it will help us gauge in a better fashion.
So, sir, in terms of the expense that we would, or the operating expense that we would be operating in Delhi as a market, apart from the rental, all other costs remain the same as we do back home. And the rental cost would be a little higher, which is around 3%, compared to the regular number of 1.5% or 1.2% that we would deliver as a rental cost. The Delhi rental cost would be around 3%, that would be a little higher number. But in terms of the manpower cost or everything else would remain in line with, so the major heads would be electricity, manpower, and security, housekeeping. Apart from that, the major cost that was there was on the marketing launch, the business promotion. So that was on the higher side. Usually it would be around 1% here, but for the initial launch, because there was no generation of revenue, so I would be able to tell you the approximate number. It was around 3.5-4 crore rupees for the marketing spend that we did for the initial launch.
Thank you. We have our next question from the line of Mehul Desai from JM Financial. Please go ahead.
Yeah, hi sir. Just wanted to get, if you can just give some on how was the growth in AP and Telangana market in terms of revenues there, and what are the kind of store expansion plans for those markets?
Right. So, sir, we'll give a broader number. So we look at around 30% of same-store growth coming in because most of the stores that we opened in AP and Telangana in the tier 2, tier 3 cities were during the pandemic year. So in fact, we were not able to run those stores completely. Now we are looking at those stores delivering a much higher number than what they were initially doing because they were opened in the pandemic period. So we are looking at a much higher number coming into those places, especially tier 2, tier 3 cities. This Diwali also, it gave us a flavor of that. And going forward, we are looking at expanding into these regions, places like Vijayawada, Tenali, Guntur, Kurnool, Nellore, Rajahmundry, Bhimavaram, Tirupati. So these are the places that we have already looked at expanding for the coming time. And it would always, give us a breakup in terms of the total split. That contribution is coming from the upcountry market of Telangana, which we are operating around 17 stores today, and around 22 stores that we are operating in the market of Andhra Pradesh. It is already giving us a higher throughput to what it was giving us in the previous periods.
Okay. And our store expansion plans, I mean the 103 store count that we had in FY22 and now 112, we are looking at what number for FY23?
FY23 end, we would be adding up another 15 to 18 stores, sir, in the existing markets.
In the existing market. And lastly, you said 3.5 to 4 crore marketing spend that you have done. This is for the Delhi launch is what you are saying, right?
So this would include all BTL, ATL and BTL activities along with the business promotion, where, sir, during the launch, we had given out gold chains for every 2 hours in all the 8 stores that we had launched. That's primary part of our marketing launch, along with, all the major publications that we carried our launch ads with pre-launch offers on radio as well as post-launch offers running through on the radio for a month with outdoor hoardings, with celebrity promotions, endorsements. All of those things put together was the launch plan that we had planned for Delhi NCR because we were launching 8 stores together. So we want to make sure that we create a buzz in the market. And as I told you, the periphery of Delhi NCR is quite huge. So we had to plan it accordingly because one of our stores was placed in Ghaziabad in Uttar Pradesh and 7 of the stores were placed in Delhi city. So we had to plan out the marketing plan accordingly. So that is why we looked at that kind of a spend which would justify the launch for 8 stores together.
Sure. So, Delhi NCR in gross margin terms, the store gross margins would be similar to what AP Telangana does?
Yes, sir. Because the product mix also remains similar, and that is why we're looking at a similar gross margin levels at the same time.
Gross margin. And lastly, right now in first half, in Q1, you did 14% gross margin, 13.6 in Q2. This Q3 is typically a higher gross margin. Is that understanding correct?
So, sir, exact number I won't be able to share with you, but yes, definitely yes, the product mix remains a little different, and definitely yes, Q3, if you look at the Q3 numbers, it would be in line with what we delivered in the past as well. So we are quite confident that the Q3 would be in line with the past, and it would. So what happened is every quarter for us would play differently. Like Q1, Q3 would be on a similar range, Q2 and Q4 would be on a different range because the product mix would be a little different, and the seasonality and the productivity also would change. So then you would overall look at a blended by the year end.
Okay, understood. And this marketing spend of 3.5 and 4 crore, do you see this kind of spend coming in second half also for Delhi NCR, or is it done now?
No, that is done. So basically, it was a launch that we had to create a buzz in the market for the brand being available there. But now it is going to be all organic. So it will be in line with whatever the sales that we generate. So it is going to be in line with what we do back home also. So the marketing cost is going to be limited to limited spend over limited medium until the next summer starts off. That is Q1 of next year.
Understood. Got it. Thank you so much, sir, and all the best.
Thank you, sir.
Thank you. We have our next question from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, am I audible?
Yes, sir. Yes.
Yeah, hi. Congratulations on a great listing and great performance this quarter. So I just wanted to get a broad flavor of our growth in the upcoming years. So would we be able to give out some kind of numbers that you might be expecting maybe next year or something like that? Because we had a very rapid store expansion, and as a store matures, we will be getting better and better revenue. So what kind of growth are we looking in the upcoming few years? Even range would do.
So, sir, usually we plan to add up around 20 odd stores every year. That is what the plan is. And in order to the expansion of the stores, as well as the new stores, usually the year 1, year 2, year 3 would give us a higher growth rate compared to a same store growth compared to the vintage stores, which are 5, 7, 10 years old, for example. So what we look at is we look at a historical data, and that is what is in line for the future as well. So we're not expecting any inorganic growth coming in for us because the stores that we expand the product categories that we are into. So we will look at an organic split, and development of that going forward would be in the range of around 20-25%. That is what we will look at organically for the coming times.
Okay, so that helps a lot. And another question related to our finance cost. So as we are repaying some debt and we've gotten some our IPO proceeds. So what could be our finance cost going forward? Because it's been around 23 crores in the last 2 quarters. So we've done roughly 50 crores in H1. So, just a broad range of, what do we see our finance cost going forward?
So, sir, if you have seen, we're working towards it. So the finance cost would be in line because the working capital requirements are higher, and this would again depend on the seasonality. So it would be Q1 and Q3 heavy on the working capital requirement versus Q2 and Q4 little lower. So we definitely have paid up a 59 crore term loan that we had on our books. So that was a long-term debt that we had repaid. This was majorly the acquisition of properties that we did in the Delhi NCR region. Going forward, we would not be looking at this kind of a drastic increase in the term loan requirement versus the working capital cycle or the working capital days remain more or less similar. We try to enhance that. If you look at the number of inventory days also have dropped down a little bit, but we are in line with enhancing all fronts to make sure that this comes in line with for the future as well, and this is in line with the sales that we deliver.
Thank you. We have our next question from the line of Divesh Mehta from Dinero Capital. Please go ahead.
Sir, hi. Thanks for taking my question, sir. Sir, I had one query. So when I was going through a presentation on your slide number 10, So I was just referring to it, and I saw that the number of closed outlet has been only one, and that is also in FY22.
Correct.
I know I know we follow a cluster approach when we are trying to target the market and we while we go for the store opening and all. But sir, can you give me a per store metrics that how we plan for it and what is the approach, how to get payback in the shortest period?
So sir, what we look at firstly is that, we do a lot of research before we open a store. So that is why you would see very less number of closure from our side. So we don't intend to, pick up stores randomly. There is a lot of study that goes behind, a lot of research that goes behind before finalizing the store. So that is why we limit ourselves to opening 20-25 stores in the calendar or a financial year, is to make sure that every store is handpicked by the team and making sure that we fall in line with all the compliances that are to be followed. So that is why one store that we closed down was a previous store in FY22, whereas just half of the year you would not see any store closures, and historically also we would not close stores. So we look at stores which are at the borderline performance or something. We try evaluate stores month on month, quarter on quarter, to make sure that the productivity of the stores are increasing. And wherever we feel like, especially this would happen with say an exclusive brand outlet or a store where the productivity is little lower, that is where we would like to take a call and not run the store if it doesn't perform and meet our expectations.
But sir, I was little bit I was surprised that in last 3 years we have closed only one store. So we have been so specific with the location selection and our stores. All the stores must have been performing very well to get such kind of efficiency out of it.
Correct. Yes, sir, they are actually. So if you look at the stores that we operate versus the number that we deliver in terms of top line, looking at only the multi-brand store, so the major split would be multi-brand store and exclusive brand outlet. So that's why the exclusive brand outlet would definitely deliver a lower throughput compared to a multi-brand outlet, because it is a brand specific and a product specific store. So that is why we would look at the multi-brand, which contributes to around 95% of our business. So that is more important. And when we look at the matrix there, so we look at per square foot revenue generation that we do. So if you look at on average, our stores deliver over 40 crores plus, including tier 2, tier 3 cities in upcountry of Andhra Pradesh and Telangana. So our aim is always to make sure that we increase product categories in a store, the productivity per store, and look at every season to deliver a constant number annually, sir.
And so one more question. So when we use the store name, which is Bajaj Electronics, in Andhra and Telangana, and outside Andhra, Telangana, we are using the name Electronics Mart, if I'm not mistaken.
Yes, sir. Correct.
So how do you see this resolution coming in future, and how do you see this will pan out for our company, sir?
So that was an intentional plan that we had done, where we used the company name, which is Electronics Mart, for that other region that we are operating in. So right now, this is the plan that we want to stick to, and once we have a little more clarity from our end or little more, we see a little more change coming in the future, that is when we will probably take a call. Right now, this is what we want to stick to, expanding with our existing name of Bajaj Electronics in the region of AP and Telangana, and anything outside this region, we will be expanding under the name of Electronics Mart.
But is there any litigation going on with this name or anything?
Yes, sir. So there is actually a litigation going on in the Bombay High Court, filed by the Bajaj Electrical Group. So till the time that is the matter is sub judice in the court, we won't be able to comment on that. But that is all the disclosure has been mentioned on that at the same time. So that is why we're waiting. We don't want to complicate things. We want to make sure that we concentrate on the business rather than concentrating on the case. So that is why we started with the name Electronics Mart. And once things fall in place, then we would then look at taking a decision.
Thank you. We have our next question from the line of Krishna Kansara from Molecule Ventures LLP. Please go ahead.
Hi, sir. So my first question is regarding your strategy behind acquiring stores in Delhi NCR. So what was your thought process behind acquiring stores versus not leasing them?
Right, ma'am. So, ma'am, when we started evaluating bigger markets like Janakpuri, Lajpat, Rajodi Garden, or the prominent markets in Delhi NCR, some of the rental costs there, we look at the yield versus the buying out property in terms of capital expenditure that we would do on these stores. The cluster size, what are the competition delivering in that cluster, how big is that cluster. So there are a lot of these reasons when we take a call on whether we lease out a store or buy out a store. We would first look at a preference of leasing out the store where the yield is less than 5% or so. So once we are confident enough that the markets are big, or the properties are only available on a certain criteria. So that is why we make a decision on whether we lease out the property or we buy out the property, ma'am. So out of, if I give you a mix of about 112 stores today, we own around 20 odd properties on the books of the company, where there is a mix of partly owned, partly leased, and completely owned properties as well, ma'am.
Okay. Okay, sir. Sir, my next question is regarding your refurbishment cost. So in your DRHP, you had mentioned that per store, you have refurbishment cost of around 2.5 crores. So we take this on our books, but this will not be a one-time thing, correct? So what is the frequency at which we incur this refurbishment cost?
Ma'am, one second.
Can you repeat the question?
So my question is, the refurbishment cost which we take on our books of around 2.5 to 3 crores, so this won't be a one-time cost, correct?
Yeah, it is not. In fact, it is actually the improvement, leasehold improvement.
Correct. But
Right.
this cost won't be a one-time cost, right? So what is
Yeah.
the frequency at which we incur this cost at the same place?
No, we will not incur the similar cost frequently. Normally, this is as per our policy, we will write it off over a period of 8 years, and then in between we incur on maintaining these leasehold improvements, mainly the air conditioners, what are the joinery work. So only that will recur, and after we write off, if we decide to upgrade the store, or that is the time again we need to incur this expenditure. Like normally it happens once in 8 years.
Okay. Understood. And sir, will this refurbishment cost increase when we enter in Delhi NCR?
No, ma'am. In fact, what we try to always do is try to, we look at coming up with newer ideas for store displays and store interiors, so that the refurbishment cost on a longer term reduces, so that, we use products or materials where the refurbishment cost over the period of time or the durability of these products are much superior, ma'am.
Okay.
Thank you. We have our next question from the line of Nirav Vasa from Anand Rathi Share and Stock Brokers. Please go ahead.
Hello, sir. Would it be possible for you to share the SSG for H1 FY23?
So that stands at around 30 odd %, sir.
50%.
30, 30, sir.
30. Sir, any guidance that you would like to give for FY23 performance?
So see, the Q1, Q2 performance was as expected that we've delivered, and looking at the FY23 annual number, the projection for the next 2 quarters, because we've already crossed Diwali, so we are on track. We're quite confident. I would just like to give you a flavor that Diwali was quite a good period for us, and looking at that, we're quite confident that FY23 would be in line of what we had expected and projected around 20% growth. That is what we looked at, and we are on track of delivering that number, sir.
Sir, additionally, the last question that I would like to ask is, based on your experience of 4G upgradation, and now with 5G upgradation on Avail, there are a lot of testings which are happening across multiple cities.
Correct.
What kind of potential are you seeing arising for us from 5G upgradation once it is done on pan-India basis, or especially across our geographies?
Correct. So, sir, that way we are quite confident the market that we operate in, 5G is going to be firstly available here very soon. So that anyways gives us the confidence that we're going to sell more number of 5G devices, number one. Number two, sir, as a seller, we are all a premium sellers, so we don't do a lot of feature phones. So from the initial start of selling mobile phones, we're already doing smartphones. We're quite confident that the customer base that we have for our smartphone devices or the upgradation that we might look at in the future are going to be quite stronger, because the ASP that we deal with are on the higher side, which cater to the 5G device segment. Tier 2, Tier 3 might take a little longer for the adoption of 5G, but at least the cities that we operate like Delhi, NCR and Hyderabad, we're quite confident that it would be sooner than other cities that we will be able to sell higher number of 5G devices.
Thank you, sir.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone.
Ma'am,
Yes, sir.
I would like to add something to the answer which was given by our CEO on the
Sorry,
interest cost.
can you come closer to the speaker, please?
See, I would like to add something to the answer which has already been answered by our CEO earlier on the finance cost.
Sure, sir. Please go ahead.
Yes. Here the finance cost comprises interest expenditure as well as certain amount to be charged. It's a notional interest charged on the leasehold liabilities created in our books as per Ind AS 116. See, people, we should have answered this, appropriately that question. See, for example, in the current financial year, out of 49.9 crores of our finance cost, the actual interest cost on account of our borrowing was only 22 crores. Similarly, during the half year and in the previous financial year, out of 39.5 crores of the finance cost, only 15.69 crores was only on account of the borrowing. So this was the further clarification to be added in this discussion.
Thank you, sir. On behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.